All right, today we're tackling a company that's, well, it's walking a real tightrope. It's called Sky Quarry. On one hand, you've got this incredible, world-changing idea. But on the other hand, oh boy, some of the most terrifying financials I've seen in a long time. So let's get right into it.
So just picture this for a second. Think about all those old asphalt shingles from roofs, right? Millions and millions of tons of them. Usually, they just get tossed into a landfill where they sit for, like, centuries. What if you could take all that trash and turn it into something valuable, like oil? I mean, that's the dream, isn't it? It's like a perfect mix of cleaning up the planet and creating energy. And that, right there, is the incredible promise behind Sky Quarry.
Okay, so first things first, let's talk about the idea itself. Because, on paper, it's absolutely brilliant. Super compelling. So what Sky Quarry has put together is this really unique kind of three-part business model. Part one is that core green idea we just talked about, turning waste shingles into oil. Pretty cool. Part two, they actually run a traditional oil refinery. And for part three, they're developing oil sands out in Utah. The whole goal here is to create what they call a circular energy business, this hybrid of, old school energy production meets new school green recycling.
And this is a big reason why people are even talking about this company at all. See, in today's market, having a strong ESG story, environmental, social, and governance, it's a huge deal. Having that narrative about helping the planet, it just attracts a certain kind of investor. It opens up doors to funding that, frankly, a plain old energy company might have a really tough time getting. I mean, it sounds amazing, doesn't it? It's a win for the environment, a win for energy. What's not to love? So you gotta ask, what's the catch? Well, the catch, my friends, is what happens when you stop reading the slick marketing brochure and you start looking at the cold, hard numbers on the balance sheet.
And that brings us right to our next part, the harsh financial reality. Yeah, this is where that beautiful green dream runs smack into a giant wall of red ink.
Yikes! The numbers here, they really do tell a rough story. First off, this is a tiny company, a microcap, worth only about $10.5 million. But get this, it's losing $13.5 million, more than its entire value. It has negative free cash flow, which is just a fancy way of saying they are burning through cash like there's no tomorrow. And to top it off, their working capital deficit is almost $10 million. In plain English, their short-term debts are just crushing their short-term assets. But if there's one number you need to see, it's this one. This is the company's Altman Z-score. It's basically a formula that's been around forever to predict the likelihood of bankruptcy. Now, anything below 1.8 is considered the distress zone. Sky Quarry, their score is negative 2.96. That's not just a red flag, that's a 5-alarm fire. And, well, the stock market has reacted pretty much exactly how you'd think. When the company went public, the stock was $6 a share. Today, it's trading for about 35 cents. Just think about that. That is an absolutely catastrophic loss for anyone who got in early. It just screams a total and complete lack of confidence from the market. Okay, I know, that was pretty grim. So is this thing just a total lost cause? Well, not necessarily. There is a path forward, even if it's a super risky one. So let's flip the coin and look at the bull case. What has to go right for this to work? So the main argument for this company actually succeeding still comes back to that original, brilliant idea, right? Step one, you collect all this waste that nobody else wants. Step two, you use your special tech to magically turn it into something people will actually pay for. And step three, you make money. Now, if, and believe me, this is a massive if they can actually prove this model works on a large scale, then the whole financial story we just saw could completely turn around. And on top of that main idea, there are a few other things that could help. For instance, they could upgrade their refinery to make it run better and spit out more profit. They've also got some power generation capacity they could sell off, creating a whole new revenue stream. And then there's this very speculative idea to tokenize their assets on the blockchain, crypto stuff. Who knows, that could pull in a whole new crowd of investors right in the hype train. But let's be real. For every single one of those potential good things, there is a gigantic looming risk. So let's not get ahead of ourselves. We have to look at the bear case here. And that's the very, very real chance that this whole thing goes to zero. And really, the biggest risk of all can be summed up in 2 words: going concern. And this isn't just me saying it, okay? This is a formal warning from the company's own auditors. They're the ones putting a note in the official filings saying, hey, we have substantial doubt that this company can even stay in business for another year unless it gets a huge pile of cash, and fast.
So yeah, the risks are piling up. But look, the biggest piece of that risk pie, by a long shot, is just liquidity and bankruptcy. We're talking about the simple danger of running out of cash. And right behind that, you see shareholder dilution. And those two things are completely connected.
Let me explain how that works, because it's important. To get that cash they desperately need to survive, Sky Quarry just keeps printing and selling new shares of stock. Just in the last year, the number of shares out there has jumped by about 24%. It's a survival move, for sure. But it means that if you own a share, your slice of the company pie just keeps getting smaller and smaller. It's what we call a classic dilution spiral.
Okay, so we've seen the incredible dream, and we've seen the financial nightmare. So how in the world do you make sense of all this? Well, that brings us to the final part here, trying to frame this thing for what it actually is. It really boils down to this. On one side, you have the good stuff, this totally unique business model, a fantastic ESG story to tell, and yeah, potentially massive, massive upside if they can actually make it work. But on the other side, you've got the bad stuff, just crippling financial distress, that constant dilution we talked about, and technology that, let's be honest, still hasn't been proven to work at the scale they needed to.
You know, one of the sources we looked at put it perfectly. It said Sky Quarry is a classic lottery ticket microcap. And that really says it all. This is not a normal investment. It's a lotto ticket. You're paying a very small price for that ticket, you know, the super cheap share price, and you go in fully expecting it to probably be worthless. But there is that tiny, tiny non-zero chance that you hit the jackpot. So who on earth is this for? Well, this might be a fit for, say, a high-risk trader, a speculator, someone who really understands the extreme risk they're taking and is maybe just playing a short-term move based on some news. But who should avoid this? Oh man, pretty much everyone else. If you're a long-term conservative investor, if you need income or dividends, stay far, far away. This is the very definition of speculation. It is not investing. And in the end, that's really the question you have to ask yourself. The entire future of this company boils down to three things. Can they raise the money? Can they scale the business? And can they prove the tech actually works? If they pull it off, the returns could be, well, astronomical. But if they fail, which, let's be clear, is the much more likely outcome, investors are probably going to lose every single penny. So you have to decide, for your portfolio, is that potential jackpot worth the price of the ticket?